Okay, let's cover Bitcoin, short-term, medium-term, long-term count before we start. Just to let you know, we've got this webinar, 7 spots left for next Saturday with Senex, who's an experienced Forex trader I've been following for many years now. So we've collaborated twice in the past. This is going to be the third one. He's going to cover the first 5 points, and obviously that's applicable to all markets, and I'm going to be covering swing trading. Basically, how do you flip from one stock to the next every 3 to 10 days and compound your profits over the course of the year. So it's going to be a good one. Everyone will receive a recording whether or not you attend the live session, and you will be sent the email around 15 minutes before the webinar starts. So that's 2 p.m. BST, which is 9 a.m. Eastern. So just click the sign me up button and you'll get straight through to the PayPal page. So should be a good one, not to be missed. I think we have 7 spots left, so get them while you can. Okay, Bitcoin. So let's zoom out. Let's go to the long-term count. So the long-term count, as I had it, pretty much up until about a week ago, was basically a WX, and there's some debate as to where the X is, either here or here, but WX, Y, X, Z. I'm of the opinion Bitcoin has not bottomed, and I'm still of that opinion. I feel the low is going to be, 2496, 2K, whatever. There's one more push down here. Now, in the group, I was saying a couple of weeks ago, look, we're definitely going to get a move up out of here to 5K. But now that we've got the move up to 5K, it doesn't necessarily mean that this count is still my primary count, simply because of the fact the violence and the speed of this move, and the fact that we've broken key resistance levels like this descending trend line, as well as this 200-day the 200-day moving average. So we have broken key long-term support, as key long-term resistance levels. Okay, but that is one count to have in the back of your mind. So the question is, if that count is now not my primary count, well, now we have to come up with another count, and the count which I have is something like this, whereas all of this was a WXY here. That's one completed cycle. Yeah, A wave. Now we're going to make some kind of B wave, and we'll get into how that's going to happen. Then we're going to come down to make a C wave. And this count validates a lot of things. It validates, number one, we're still in a bear market. Number two, it validates we're not going to go to 20K just yet. Number three, it validates eventually we're going to go to 2K, like I said over 600 days ago when Bitcoin was at 14,000. And number four, most importantly, it validates 3.1 as clearly a short-term intermediate swing trade cycle low, which is the most important thing. Okay, now, what does that mean for the overall larger picture? So hopefully everyone's following this. Now, so that's a WXY to make a larger A. This is now the swing low. Now, I've drawn these fibs all the way from the top, which is 20,000. Your 23.6 is sitting at basically, what is that? 7,000. Okay, it's highly unlikely for this B wave not to get to at least 6,000, frankly. But that's your 23.6. Now, if we say, well, maybe it's not correcting the entire move from 20,000, maybe it's only correcting the move from here, which is about, I don't know, from the X wave. So maybe it's only correcting the move from 11,500. Well, either way, we're at the 23.6, and it has to correct at least 38.2. Why does it have to correct at least 38.2? Well, let's have a look at another bull market like gold. Well, gold, if we zoom out, gold from the top, from the peak in 11 to the lows, that was one complete cycle, and it hit the 38.2. So as a minimum, we're going to go to the 38.2 most likely. So assuming we're not correcting the entire move from 20,000, so worst case scenario, we're basically correcting the move from 11,000. Either way, there's your target, and that's what I've been saying to the group, that we're going to go to 6.4K, because there's Fibonacci support there, and then there's also Fibonacci relationship between whatever this is and whatever this is, because that can be seen as an impulsive wave, also a corrective wave. So that would be the B wave, then we come down in a C. However, it's not as simple as that. It's just not as simple as that, because there's another count here which is also going to complicate things. So anyway, that's one interpretation. Now, the second, so if we say, right, look, 3.1k is a cycle low, we are now going to correct either the whole move from last December or the move from 11,000. So it's likely we're going to go to at least 6.4k. So the problem is, my hesitation is simply because we are in no man's land here at a previous low volume node. There's no volume beneath and there's no volume above. So this could easily just roll over here right now in the short term and do something like this. And that's why there's a lot of hesitation. I've no doubt we're going to see 6k. There's no doubt about that. And there's no doubt we're going to hit 6k before we hit 3.1k. And there's no doubt we'll hit 2k before we hit 20k. The problem is we're in all of this no man's land. So we could easily get something like a 3-wave correction coming down to this line here, which is 47. Technically, even retest the 200-day moving average at 4,500, and even test potentially 43 and 4,100, and then we make our move up towards 6k. So something like that. And so that's the reason for my hesitation. It's not so much I don't understand what my large account is, because I do. It's the short-term hesitation. So for anyone who's bought in this now presumed accumulation, short-term accumulation zone, they're okay, because they can just hold to 6.4k, which it probably will hit. I think the chances of us hitting 6.4k at some point over the next, I don't know, couple of months are quite high, frankly. I think they are very high, in fact. They can hold because they can stomach a retracement. But if you've bought here at 5k, that's where the problem lies, because we could retrace all the way back down to 4.2 and still go up towards 6.4k. And then in which case, this is all going to be an A, B, C, A, some kind of counter wave B, then to make a larger C. Obviously, let's just put that in blue. So this, well, let me just change that to mine. Oh my. Right, there you go. That's better. Right, so a larger ABC to make a B. So that could be one potential interpretation, okay? And that's the problem with where we're at. So I was saying in the group before this massive move, look, we're definitely going to get a move up to 5k. There's no hesitation, because I don't like sitting on the fence. Those who have been following me for a long time, because I don't like sitting on the fence. The problem is I've got no choice but to sit on the fence, because we're in no man's land here, right? There's no volume beneath and there's no volume above. So this could very easily tomorrow go all the way to 6.4k, then reject, or go down lower and then go up. So you're in no man's land. Now, let's assume this is going to continue and all it's going to do is a short-term pullback and maintain 4.7, in which case you could say, right, this is some sort of A, B, maybe that's a 1, 2, 3, we're making some kind of triangle 4, and we're going to somehow make it towards here. Then that's going to be a larger ABC towards the B wave. Now, then the question is, well, hold on a minute. If we straight away go up towards 6.4k, can that be a B wave? It probably can't, only because the time taken, I don't think, is enough to correct this entire move. So we could also get another count, which is something like this. And the thing is, this is really confusing what's going to happen here, because that could just be a larger ABC of a larger A, right? So that could just be an A. Then we could pull back, I don't know, to 50%. So 3.1k, 6.4k, halfway is what, like, 4.5? Maybe pull back to, I don't know, here, and then go up and either truncate or maybe go even higher. Maybe we could go to the next fib at 74 or maybe even 9.4. So we could do something like this. And then basically that then becomes the larger count. This then becomes the second larger, the one beneath that. So let's put that in red. And then this then becomes the lower count. So something like that. So basically we're going to end up doing a very, very large ABC. That's the larger count. This could just be an A wave up to 6k. then we come back down again, then we go back up again, then we come back down. So if that's the case, 3.1k is going to remain the low for a considerable amount of time, i.e. at least a couple of months. And then we go down, then we go back up again. So there's various counts here, but just to make it simple, let's take that count off. Let's just say, look, all we need to do is figure out what's going to happen here short term, if it's going to pull back. I think if it pulls back to 4.7, 4.2, that's a very good buy, because I can justify that as a risk reward buy. Right now we're in no man's land, and no one's gonna buy at 5k and stomach a pullback to 4.2. So I suppose you can either wait for it to hit 6.4k, wait for the pullback and then see, and or you can wait for it to come down and then you can buy that towards 6.4k. Either way, at 6.4k, we're either going to get a very impulsive leg down, in which case that actually is the B wave. We're going to come back down, crashing down, or like I said, we're going to get a correction out of 6.4k, then go back up again in 3 waves or 5 waves to even, I don't know, 7.5k maybe, and then come back down again. Or maybe we truncate at 6.4k twice, I don't know, come back down, go back up again. So it's a truncated B wave, and then we come back down again. So really 3.1k is going to remain the low. So anyone who thinks that's going to get broken in the next couple of months, you're mistaken now. This is now a cycle low, and eventually at some point that will get taken out, but this is now a very complicated corrective pattern, and so playing this, you really have to be very, very good at reading the charts. Like short term, you got to really know your support levels, your Fibonacci's. Like I said to the group, when this shooting star was forming, looks a bit dodgy, then I went back in. I thought, do you know what, I don't want really anything to do with this right now until it confirms one way or the other. And you know, it was very easy to call it at 6k, it was always going to go down, and it's very easy to call it at 3.8k, it was always going to go up to 5k. The problem is we're now in the middle of this low volume area, and it's not entirely clear what the next move is going to be. Is it going to go up towards 6.4k first, or is it going to go down then go up? Either way, as far as I'm concerned, 6k is going to happen before it breaks 3.1k, and then, like I said, it's either going to come out of this 6k as a massively impulsive wave, or more than likely it's going to be corrective and then have another shot up towards 6k and then come back down again. And gold is something very similar. I mean, gold's still in a bear market, isn't it? But obviously the Bitcoin cycles are 10 times smaller than the gold cycles. I mean, it's gone from 20k to 3k in only basically 11 months. But in terms of Fibonacci time, this has to, you know, go on a little bit longer before we eventually challenge 3.1k. So anyway, that's my count. Hopefully all that made sense. Those are my alternate counts. Really, the only hesitation for me is the short term. I'm convinced now that this 3.1 is a cycle low, and eventually it will get challenged. And for anyone who bought down here in this accumulation zone below 4.1k, well, they're okay, because they can easily just hold and then sell at 6.4k, wait for some kind of pullback. Anyone who bought in at around 5k, obviously they're going to sweat it, aren't they? So that's where the hesitation is for anyone who bought at 5k. And if we just cover the stock market, so the stock market's interesting. I mean, obviously we're going to go to 4293, but that's going to take years. And the way this stock market has now run up, it looks as though the end of this cycle is going to happen in 6 months. Obviously, that's not going to happen. We're not going to have a recession till at least 2021, if not longer. So, and that's assuming the wave does not get extended. So there's no way this stock market can continue to go higher like this without any sort of pullback. And with the whole go in May, come back, you know, St. Leger's Day, we're bound to get some kind of pullback. And for me, there is a link between Bitcoin and the stock market, and I can show you that here. I mean, we know Bitcoin fell off first, stock market followed. Bitcoin stock market bottomed in December 24th, Christmas Eve, and Bitcoin, because we're running this now as a cycle low. Bitcoin bottomed out basically 10 days before. So it's very, very clear Bitcoin is in some way linked, and association is not causation, but there is a link. And this sort of random little sell-off here, that's what worried me. And given the stock market linked, as long as the stock market continues to churn higher, then we're fine. But that's a pro gap. There's an acceleration gap in here somewhere, and that's an exhaustion gap. That's an exhaustion gap, and that was on the futures as well, which is almost certainly that gap is going to get filled. And you see here, we're just gapping up the whole way, and these gaps should ideally be filled. So I'm not happy with the fact that this market, it needs some kind of pullback, either in terms of price or time. And it doesn't have to have a large ABC. I think that's very, very unlikely, because we're so bullish, and that's going to be unlikely. But at the same time, it needs to do some kind of correction. So it's just in the back of my mind, like, what if the stock market next week or the week after, very soon, double tops at the all-time new highs, traps a lot of people, then just starts to just do this, make some kind of long drawn out, I don't know, cup and handle or something, fill some of these lower gaps down here. I mean, it's that gap there that has to get filled at 28, 38. Maybe just, pull back 3 or 4%, correct here for most of the summer, and then towards August, September, it goes higher. The way this market is going, we're going to hit this target within 6 months. Obviously, that's not going to happen, because it's going to be at least 2021, if not later. We're not that end of cycle right now. Now, looking at the fractal that we're playing, is basically 1998. So we're basically copying what we did here. So as I mentioned on my podcast, this was very, very impulsive, and there was a bit of a correction here as we made all-time new highs, and then it started to become very overlapping on an ending diagonal, which was the underlying weakness. So maybe this is what we're going to get in the stock market over the next couple of years. But there needs to be some kind of pullback. I mean, even here we got 1, 2, 3, 4, 5 week pullback, and that was at all-time new highs. So that's just something in the back of my mind. So just watch out for that link with the market. I'm not saying we're going to get a large pullback. I don't think it's going to be large at all. Like I said, I maintain a bullish stance, but that's just something to note if we start selling off next week, whatever. So so going back to Bitcoin, those are my sort of take. So ultimately, we're not going to go to 20,000 right now. We're not going to go to 3.1k anytime soon. Eventually, we are going to break 3.1k, and short term, almost certainly, we're going to go to at least 6.4k as far as I'm concerned. However, short term, I'm not entirely sure. Do we pull back first to the trend line, to the 200, 4.7, maybe 4.8? That's the only doubt that I have in my mind. Do we pull back first? Either way, we're definitely going to go up here, and then either all of that is an ABC and we come straight down, or we then correct here, we bounce around a little while longer in something like this, then maybe we double top, maybe go 7.5k, then we go back down again. That's the only thing which logically makes sense, because it validates 20k as the top, the eventual low being 2k, whatever, and it also validates 3.1k as a very clear cycle low. And let's see, I mean, if this is now correcting the entire move, it could even go as high as 7k. Can't imagine it going above 10k, maybe even as high as, I don't know, 7.4k when all is said and done. Obviously, it's not going to be a straight line. I might have to come back here and then go back up. But that would make sense. And on the log chart, it looks like a really big move, but actually on the regular chart, it's a tiny move given how high that we've come from. So moving to 7.45 isn't that big a deal, really. So I'm not saying it's going to do that. This is not financial advice. I'm just saying, those are the possibilities, really. So anyway, I'm going to wrap it up there. So hopefully that made sense. And obviously this requires constant updates, like daily or weekly updates, because so many things could happen. But as far as I'm concerned, 3.1k, that's the cycle low, and that won't get challenged for multiple months. I mean, it's already been nearly 4 months, so that has to be validated as some kind of low. So this won't get challenged probably until, I don't know, September or something. So we're just going to end up bouncing around here between, these sort of levels before we end up coming back down again. But that's my take. So hopefully that was useful.